Hey everyone, I am Lauren Jones. I am here to talk to you guys. We're live today. We're talking about preparing for adulthood and not everything. Like, we're not going to talk about opening a bank account and all those fun things, but we're going to talk about some things that people forget to talk about, which is incapacity planning and life insurance. So we are live, which means anyone that joins in, you can ask questions along the way, but we'll keep the video up and share it as well to watch later. So like I said, I am Lauren Jones. I am an attorney in West Sacramento, and I do estate planning, which includes incapacity documents, which we're going to talk about. And then I also do business law as well. And I have Kerri with me, which I'm so excited to have, and her be my guest speaker with me, I guess, guest talking buddy today. Kerri, tell us a little bit about yourself.
Thank you so much, Lauren. Kerri Sanford with Lawlen Insurance Solutions. I am an insurance broker, so I help people protect themselves and their families and their assets through using an asset, which is life insurance. So I'm happy to be here to have a conversation with you.
I know. I love doing presentations or Q&As. We're at the Q&A today, right? I love doing it with Kerri because she's super fun to talk to about all this great stuff. So Kerri, you're here to talk about life insurance. You're here to kind of give us some understanding. Why should a young adult coming into adulthood, or even just, maybe they're in their 20s, why should they look at life insurance in part of like kind of preparing and growing in their future? Like, how does life insurance affect them? Why should they be thinking about it?
That is a great question. And so life insurance is an asset. And when it comes to life insurance, when you're younger, it's less expensive, number one, because you're younger. Two, it can be easier to qualify because lower risk as far as health risk, health has not been impacted yet, oftentimes because you're younger. And so you can lock in at a lower premium and then protect yourself going forward. As you get older and you have different seasons of life, you're already protected. And you're also protected against not being insurable later on in life.
How realistic nowadays is that not insurability thing? Like, is that only with certain types of policies, or is that can be across the board? Because I know, like, there's term life, there's whole life, there's different options. Is that uninsurability like across the board in all different policies?
Yes, it can be, depending on what health event has occurred, right? What the diagnosis is. So it really is an individual situation. However, that's why it's so important to work with someone that specializes in life insurance to help you navigate and to understand the different carriers that understand the underwriting guidelines for those carriers. However, though, there are certain life events that are disqualifiers to be insured, unfortunately.
Oh, that's a bummer. Well, so then tell me, like, when you're trying to decide, like, you're a young adult, why would you choose a term life or a whole life policy? I mean, like, I think everyone somewhat knows those differences, but maybe you can explain the differences, and then we can understand like how those work specifically for a young adult, because I think they might mean different things for them.
Absolutely. So term insurance is one of the more popular that people understand or are more familiar with. So it's for a certain term. It could be 5 years, 10 years, 20 years. There's level, meaning the premium is going to stay level, the coverage is the same. There's so many different variations, but it's time specific. And oftentimes allows someone to purchase a higher face value at a lower monthly premium. Okay. And so that's also why it's very popular. And people gravitate to that plan for a couple of reasons. So it could be to offset potential debt, right? It could be for mortgage protection, specifically for people that are in their 20s and 30s. Maybe they have student loans, and maybe they have the private loans where maybe there was a co-signer, a family member, or a friend. And so they can actually purchase an insurance policy to protect themselves and the co-signer for that specific transaction.
I actually want to jump in on that. So that idea of like, so you want to have some money for your debt, right? So on the estate planning side of things, your debt does not survive you, right? It doesn't mean that like you have a debt, it goes to your parents or something else. But that's not the case when it comes to co-signers. So co-signers change that game, right? Because you have the situation that you took out a debt, your student debt, you took out a car debt, you needed a co-signer because you didn't have a lot of credit. And then you tagged you tag that cosigner onto it, well, that means that if you're not here, the cosigner becomes responsible. So in those cases, you're obtaining insurance policy with the beneficiary being the cosigner, most likely, right? So that actual money, because most likely you're not going to set up like a trust for just a life insurance policy. But you're going to set up your beneficiaries to be the cosigners of your loan so that debt can get paid off and they're not ultimately responsible. That's kind of how it works, right?
That's 100% accurate. And this is where I do know families and situations where they did not do this. And it was a hardship, a financial burden for the family when you're already at a sensitive emotional time. So it's a great way to, for a low cost and to mitigate that risk.
Yeah, because if someone young passes away, that's not an expected situation. So that's an extremely emotional time that something like that happened. I mean, obviously there are situations where someone might be sick, but most times it's very unexpected. And so having to deal with that on top of all of a sudden, oh, I just forgot that we co-signed this massive loan with you, which of course the co-signer like intends that they will pay that off at some point. If you know, they do that for a reason, but they really like, they're not really expecting to pay it, right? They're really expecting you'll pay it. They're just there in a backup situation. The other thing comes in though, like, what if you didn't actually, so student debt is a huge topic, right? We all have either been saddled with or know someone saddled with a lot of student debt. Same thing with my family, same, lots of debt going on with our loans. Yes. And everything to go through school. So when you're also situations where maybe your family like helped you out, right? They paid for it, but then there was the understanding that you didn't need to take out the loans, but that you would pay those loans back, or you would pay some portion of it back. It's some sort of agreement between you and your family about that. And that's another reason why you might have like an insurance policy to help actually give them that money back if something were to happen to you and you couldn't actually pay it. Because I mean, I do contracts, right? So I'm not going to tell you should do handshake agreements, but I understand the reality that they happen within families like all the time. So you definitely want to help prepare and make sure you have some coverage there.
Definitely. We see it a lot when families with helping with down payments to purchase property, homes.
Yep.
Perfect example.
Right. Because that's a big one. And that's kind of, and so in my world, some things that happen with that are that someone might be giving a down payment for an asset and it's kind of like built into that parent's trust as a like a part of their inheritance they received early, potentially. Sometimes it happens, but I would say a lot of times the handshake kind of like, we just give you this, we expect you to pay it back and take a second out on the house or something later, or take, whatever it is to pay that back. And then if you can't make that happen because you're not here, that's a huge deal. So, and that could actually not just affect, if that was inheritance to split amongst other siblings, that would affect multiple people. So important to think about that there. But like, that's kind of that term policy, because it's going to end for a term. You're getting the low premium, all of that's great, but it's not intended as like any sort of, it's not specifically meant to cash out an investment type of situation, right? But that's more the whole policy.
Correct. The whole life policies, there's variations, universal life, variable life. Whole is considered permanent insurance. So oftentimes it will last through age 100. So it's designed to last your entire time here on Earth. And it's really has the cash value aspect so that it can build up the cash value, equity, so that you can actually pull out money, loan against it. So this is a vehicle that people can use for long term. So if you're looking to help fund college education in the future, if you're looking to pull out money to start a business, all those different reasons, but for future use of the money.
Yeah, I mean, even I guess that's potentially a way to kind of put away some money and build something so that you can pull it out to buy a property or something later, right? Is that something it can be used for?
Absolutely. And there's ways that it can be, pulled out perhaps, or have your money grow with deferred taxes potentially, depending on what vehicle you use. And so it's a way to also fund your retirement. You can use these whole life policies to help in your retirement years as well.
Yeah, even though our young adults are not thinking about it, it's really smart to think about that retirement planning and how to deal with that early, because then you can retire early and you have that money, or you can use it if you need it. It's a huge thing to think about. Also, the thing that like we didn't really kind of discuss is like, so those life insurance policies can help like if you do have dependents, right? And like that, I mean, that's kind of how most people think about life insurance, is that I have money to help take care of my dependents. And but as a young adult, you might have dependents. You might be living at home with your dependents while you're trying to kind of be stable on your own. You might not. You may be completely on your own. But what happens if you do have dependents, and what happens to them? Where does the money go? Like, what money is there to take care of them if you're not around? So those are also major reasons to think about like that life insurance aspect of it. It is something that can be part of your future planning for you and for others. So not just you. So, I mean, it can be either way. So we talked about all the different options, like I guess for kind of helping others, but it can be for you in the whole life policy realm.
Absolutely. We see now with the different versions of life insurance, there's living benefits as well. So, we think about life insurance for end of life purposes, but if there was a diagnosis of something, a chronic illness, terminal illness, you could pull out money as well to accelerate those the cash value, the face value, while you're actually here present. So
Yeah. Speaking of that terminal illness or all those things, that kind of like draws right into like the idea of incapacity planning, right? So that's kind of what I'm here to kind of talk about, is that this idea that like you can be alive and still have incapacity. That happens. I think a lot of people just kind of forget that that's an actual option. Like they just kind of think, well, I'm here and then I'm not. But incapacity, even at a young age, is an actual thing. You get in a car accident, you have some illness that puts you have surgery, and maybe you don't. I mean, incapacity planning can be short or it can be long. Like it doesn't have to be what we typically think about it as dementia. And so I think like the biggest thing that I run into with parents and their children is not understanding that even though as soon as you turn 18, your parents are not legally responsible for you anymore. I mean, I think we all know that, right? We all say that, I'm sure. I know, Kerri, you have older kids. I'm sure they told you, when I'm 18, you're not responsible. But what they don't understand is that also means like they legally can't make decisions for you. And you are likely not married with a spouse and all of these other things. So they're not the one that can come in and pay your bills and make your healthcare decisions because you are 18. And the problem is that many a times is, let's say the college example, right? You're living at home, your parents are paying for college, or your parents are paying for you to live someplace else. And I mean, that's actually even scary, right? You're traveling quite a bit because you're living in another location. Maybe you're across the country, you're traveling back and forth. Something could happen in that situation. Risks are higher. But even though mom and dad are paying for everything, doesn't mean that they're in charge of everything. And that's where that incapacity planning comes in, and is really important to think about.
No, I think it's a great topic. I know in my circle of friends and colleagues, we don't talk about this enough. So can you share with me, well, and the listening audience, what type of documents give that access in that scenario?
We talk about it as like 4. So, but not everyone uses all 4. It depends on I used it, right? My husband, if he was watching it, he'd be like, oh, you said it depends, because that's a lawyer thing. We do it all the time. Yeah. But really, like, the big things are power of attorney for your financial matters. And I say that as that one tends to be an iffy one sometimes. It depends on where status you're at, like at what time in your life, right? If you're living at home or you're going to college and mom and dad are paying for everything, well, then maybe there is no financial decisions to make over you at this time, right? So then there's no real need for a financial power of attorney. But I would say that as soon as you become more independent, you live on your own, you're paying your own bills, that starts to change, right? You have your own apartment, you have this, like that will change over time. The next document is the healthcare, which is the healthcare directive, like who can make my healthcare decisions. And that is a very important one because accidents happen all the time. And I think it's just, not only do you want to ensure that you have the right person in charge, that you've made that decision, you also want to ensure that you actually have made the decisions. Like, you've chosen what you wanted to have happen. You've made it clear. And that's, I think, where a lot of the confusion comes in, is because your parents may have, even though you want them to make the decisions, they may have a different idea from what you've decided. So that's really important. And then with the healthcare comes like a HIPAA authorization, and that's giving access to medical records, because getting locked out of medical records is a real thing. Like, people will not give your family the information, even though there's no one else to get it potentially. They will not give it. And then the last one is what we call a living will. And that says, if you choose that, that says you don't want to be plugged into a machine in a vegetative state. And I would say 99.9% of my clients choose that. That's a real hot, I would say it's a hot topic. It's become, maybe over the past 10, maybe longer, probably longer than that, 15 years, it's become a thing, because there were so many cases where there were debates. There was cases back in the day where there was a debate between, the parents and then the husband of whether or not someone needed to be plugged into a machine or not, just to see what would happen. And people have made it very clear they don't want those decisions. Obviously, medical technology has increased significantly, which has made a lot of things easier, but some people have different views on how they want to proceed in that fashion. And I would say most people do not want to stay plugged in, at least in the clientele that comes to me. Most people make that choice. And that's honestly one of the biggest, one of the most decisive choices they come in with sometimes. They're like, I know that answer. I'm like, okay, cool.
Oh, thank you so much for clarifying that, because I was getting the healthcare directive and the living will kind of mixed up there. So then how do you recommend for families or just individuals to have these conversations with their families, to open up the window to educate and then to consult with a professional like yourself?
Oh, that's a good question, and kind of a hard question too. So I have this conversation when a parent and the parents are coming in to talk to me. I always we learn about their children clearly, and then we start asking more questions, right? We start finding out, like, okay, well, what is it that, how old are your kids? And we start having those conversations then. But if, like, we're also talking about getting people to have that conversation before coming to see me, like, there is that family line that, like, we're talking to one, we talk to the other, and we move our way down to see, like, what is actually happening. And a lot of people that come to me with, like, the adult, the newly college students just graduating, we start talking about incapacity documents as well. But honestly, it's that change of time. Like, when your kids are not going to come talk to you about, like, if I'm talking to the parents out there, right? Your kids are not going to come talk to you and say, Mom, Dad, I need incapacity documents. I'm sorry, that's just not going to happen.
Not happening.
I would like that, but that's never going to happen. So you need to think about it. Like, when they turn 18, as a parent, you need to realize things have majorly changed. In our world, nothing may have changed, but you had a new birthday. But you need to realize the rest of the world, things just changed. And so I would say any parent, as their child is coming to adulthood and hit 18, you should be having that conversation of, like, you can help them, you can pay for that, you can do these things. They get the choices, they get to make the choices. But, like, I would have the conversations of, who is going to be in charge of you if something happens? Have you thought about this? Because your 18-year-old is more focused on college and getting a car and all these other things going on. They're not going to, but really they need to. And I think it's honestly, it sets them in a really great footing for the rest of their future about estate planning. And I have had some clients where I have worked with their kids, and they're, between the ages of 18 and 22 or something. And they come and all of a sudden they come in for their signing, and they'll say, well, what happens when I buy a house? And I'm like, well, then we're going to have another conversation at that time. And it's great for them because they've all of a sudden started thinking about their future in a way that they hadn't been before. And so estate planning in general is such a hard topic with everyone, right? So it's like, if you as a parent don't want to face the reality that you need estate planning, then it's really hard for your kids to face that reality. So I think that, like, you recognizing the need for it and helping your kids walk through that is really great. But if your kids start walking through that process when they're young and understand what it means and why they need it, they will be super prepared in their future because they will continue on that path and know the importance of estate planning in their future. And I love it when I see families that have that line set up. Either they've already done it before me or they do it with me, because I know that the future generations will understand what needs to happen. But I mean, to answer your, I don't know that I exactly answered the question.
No, you did. You did.
Kind of like succinctly say it. Honestly, the parents need to get on board with the reality that this needs to happen, and then they need to keep their kids involved in that conversation. And I think that that's how you have it.
No, I love that. And I like that you mentioned that it's a transition of, now that you're 18, this is what this looks like. And we're still parenting adults when we have adult children. So I love that.
Yeah, I mean, it doesn't end. It just means, but like, I think that's the confusion, right? It's that, and I mean, I have a 7-year-old, so I'm not at this point, but I understand that, like, if your day-to-day doesn't change when your child turns 18, when they're still there and everything's doing the same and you're still paying the bills, like, you don't see that reality of a transition the same way. And so it doesn't, like, there are so many moments where I say this to somebody and they go, wait, what? I'm like, wait, something changed. But in their world, nothing did. So it's
in the eyes of the law.
Crazy.
Yes. Mm-hmm.
That is a real transition, and it's an important transition. And once I start saying, like, hey, where's your kid going to college? And they're like, oh, across the country. I mean, when those questions are happening, they go, oh
red
no,
flag.
I'm like, yes, you should. So yeah, that's how I would talk about
good.
it.
What about, let's say we have the documents in place, and then how often should we review them?
Oh, there's no like hard and fast on that. Like, I do try to say you should look at your incapacity documents every 5-ish years. I just in general follow up with my clients every year because things change. So like, let's say you list your parents and, you know, things, you're not having the same relationship you thought, or maybe you guys are in different places and you're just not feeling like they're going to make the decisions you specifically want, right? You should be changing that. So that's why I follow up my clients, because it's a point every year to see, like, here's your anniversary date. You should look at your estate plan, because, and this is like, no matter what it is, it's incapacity or trust or anything else, they should look at it every year because you need to review what you've done. So I say, like, you personally look at it every year to make sure it's still what you want. Updating, we say 5-ish years because what can happen, and this is why it's not hard and fast, is that some institutions can consider your incapacity documents stale after a period of time. So we want to make sure they're fresh and up to date. And sometimes it's a very simple amendment. Like, I mean, we're not making many changes. Maybe we're just updating a person or something else. And it's very simple to do. Sometimes we're like, oh, we have a house and we have this and things change. Now we're going to incorporate everything together and we're going to make an entirely different type of situation happen.
Okay, that's good. What about if people are, like, say, moving into California or moving out and they already have documents in place? Does that trigger them to amend or make any changes?
It can.
Okay.
You should definitely talk to an attorney wherever you are. So like, if you came and you did documents here and you moved out, you should talk to an attorney where you go. If you come here, you should bring your documents to an attorney here. It depends on how they're written sometimes. I mean, you can have them apply. Like, I mean, this is where that whole, I don't bring up college a lot, but it is kind of where some of those things get a little wonky, right? When you have someone that is a resident, right, of California, but they are temporarily living in New York or something like that. That happens, right? Because you're going to college in New York, but you're a resident of California. Like, we'll prepare California documents. The intent is that you'll always come back. So it depends on where you are kind of intending to permanently be and where you are intending to, and where you just temporarily are. I think that's how that, I mean, there's conversations in that on what do we do? Do we change anything? But it definitely should result in a conversation with an attorney in wherever you are going to find out if something needs to be changed or not. I mean, if you already have an attorney set up in your state and you're like, hey, I'm temporarily taking a job for a couple of years, but I'm keeping my house in California, then I'd say come to the attorney that you worked with first, right? Have that conversation first. But if you're kind of, if you fully move, like most of my clients that move, they come back and they'll have like a quick conversation with me and saying, can you amend? And I'll be like, no, you should talk to so-and-so. And then we'll send them off. But that's kind of how we work that. Again, I'm going to use, it does depend, right? It depends.
That gray area, right?
My world is all gray.
Likewise.
Yeah, people decisive decisions.
Great. Well, you mentioned just briefly trust. I know that we're talking about incapacity, but is it required to have a trust with incapacity documents, or?
So it
depends.
I didn't say it. So if you have a trust, you should have incapacity documents. Incapacity documents to me are like the baseline. That is, and some, let's just put it this way. We're talking about starting adulthood, but like there are many places in your life that all you need is incapacity documents. So what I would say overall is estate planning is in some form is needed for everyone. Okay. You can have incapacity documents without a trust because you don't have enough assets to put into a trust and it's not relevant at that time. Or your assets are enough assets or they're not the right assets. Like even if you owned a home and that home and that's your biggest asset or your only asset, right? And you have significant debt on that home, I would still talk to you about a trust because if you want that house to move to the right people and not go through a probate process, you need a trust and your house is going to increase in value. So therefore there's going to be equity in it just based on you living in it and having it, right? So there are things that kind of change that trust discussion, but you do not need to have a trust when having incapacity documents. But on the opposite end, if you have a trust, you absolutely should have incapacity documents. So that's what a lot of times I'm talking to my clients and they're a trust and I'm like, but you need to think about all these other things. So like I'm very, my philosophy is very comprehensive planning with clients. We're not just trying to piecemeal you. Like I'm not just going to give you like, oh, this one document and then this one other document. We are definitely going to go through that, process and make sure we're thinking about all of the things. But yeah, they are not mutually inclusive of each other, but they definitely do tie into each other quite well. So there are times that they do have to be tied together.
Now you mentioned this just briefly, I believe. Let's say I'm single. I'm not married. I don't have any children. And I see this a lot in my agency where, they say, I don't need life insurance. I don't have any dependents. However, it's not the case necessarily that you don't need it. So similar to the incapacity documents, how would you answer that?
Well, for incapacity, if you are single, you absolutely need the documents because who's going to take care of you? You need to find someone to take care of you and your finances. So it's actually incapacity documents are even more important when you are not married. They're important either way, even if you're listing your spouse. They are important across the board. But even when you have you do not have a spouse, it is even more important. And then okay, I don't have any dependents. Well, that's even also more important because you really have nobody. No one's there to make the decisions for you. And then you have so then the other thing is, what was I going to say? So you have that where it's you really need somebody in those cases. But then if we're going to talk about the trust aspect, having and making that planning on the trust side of things, if you're going that route, when you definitely don't have anybody to take directly, you don't have that, you don't have children or a spouse
to advocate for you.
Well, to receive your assets right upon your death, you definitely want to put something in place to say who gets it, right? So if you have a home, if you have assets, you definitely need to say who gets those assets. But then on the incapacity side, you really need to say who's in charge of your stuff. So it's honestly single individuals, estate planning is almost even, and with no dependents, it's almost even more important. They don't know who to name. I understand that difficulty. We have to figure that out, but it's so important to name somebody, even if you're married and no dependents, it's very important.
I agree.
Talk about this stuff forever, right? I'm all the many different examples. I'm ooh.
No, likewise. That's off topic. No, I agree with you 100%. because I deal with that, often with individuals that are single, not married, no dependents, and they say they don't need life insurance. And my question to them is, then who's going to cover your end of life expenses, right? And so with you, with the incapacity documents, you need the person who's going to handle all that, right? And then how are you going to fund that? And so life insurance is a way to make sure that your funeral and last wishes or things are taken care of.
And even if you're going to be cremated, it's not cheap.
Oh
Like,
no, it's
it's
not.
not
It's
cheap.
it's
Like, I
it's
mean,
just
even
as
if you're
much.
taking
It's
out a
just as much
small
as
policy just to cover end of life, like
the
that's
average funeral is $10,000 to $12,000 easily, and that's with burial or cremation.
oh, and if we start getting into if we start getting into like the fancier burial costs and things like it's and people
Very
prepaying,
expensive.
and even if you so for our younger individuals, you're not going to prepay for plans. I know that is not part of your reality. Fully understand that, right? I mean, it's just not. But for older individuals, when they're looking at that, they want to prepay for plans. And even those prepaid plans don't always cover what it is that you thought it was going to cover because of inflation and everything else. So it is crazy. But yeah, I mean, end of life planning, just it's not necessarily like the biggest concern, obviously, for our young ones, is they're just not thinking end of life. We understand that. I know we're talking about everything now because this is what we do. But they're not concerned about the end of life. But it is really like you got to consider just who's going to cover all those type of things. Like it is those, like I really think the bigger concern is like, what debts have I saddled other people with? What is gonna, if something were to happen, like how much will that cost? What do I really want to have happen? What is going to be done? And then another thing I didn't even think about till just now is like, what if you were helping provide support for your family? Like, what if you were working and giving income into your household to help your parents or whatever else, or you were providing support for a grandparent or anything else, and there's nothing left there once you're gone? Like
And that's the purpose of life insurance.
yep.
I see it often where the parents, even though they're adults now, but for any parents that are watching or listening into this later on, can help educate their adult children. So one thing I see is where if I'm employed and I have access to life insurance at my job. So yes, take the group life insurance.
Yep.
However, oftentimes we're not going to keep that job for life. And when we leave that employment, that life insurance policy does not follow us. So then you need to then get a new life insurance at your new attained age, where the cost is going to be higher because you're older, or maybe life has happened and therefore because of your health situation you'll pay a higher premium or be deemed uninsurable. So that's why we recommend to always have your own life insurance outside of your employer in addition to the employer group life insurance.
That's a really good point that I think most of us forget. Like, I don't even think my husband and I are self-employed now, so we have our own businesses. So clearly, we do not have companies. I mean, I could do it, but I mean, it's the same thing as me, right?
Mhm.
But we used to, and so that life insurance policy, of course, you take it. You're like, oh yeah, I'm going to get life insurance, but you don't think about the fact that like, oh, what happens when I leave? And I talk about this quite often with my clients. Is like, okay, so you have that, but have you talked, like when we're, just doing our consultation about things, I'm like, have you realized that you're going to leave and that will be gone? And they go, oh yeah, huh.
And
It's just not often thought about. Like you're just not, especially you're excited about a new job. Like
mhm.
why would you? But there is
and
benefit to taking it outside.
And they're basic just term policies. There's typically no riders. You can't design it for your individual situation. It's
Oh
just
yeah.
one size fits all for the company. And so it will be term. It will not be permanent insurance that would build equity, cash value for you. So it's always important to have a policy outside of the business.
Yeah, and it's better. It's life insurance through your work is better than nothing. It's kind of like I say, they're like, oh, I have a power of attorney or healthcare directive that I got on, I don't know, like the healthcare directive is like Kaiser will give you one or something. And I was like, well, it's better than nothing.
It's better
But
than nothing.
it doesn't really cover all that you need. It really doesn't contemplate everything you need. It also doesn't fit with everything else. So, it's like I'd rather you have that than just choose to do nothing. But I'd also, ideally I prefer that you'd work with someone to make sure it fits your needs.
Yes.
Well, this has been a super fun discussion. I hope it's helpful for everyone else out there to just kind of understand some of these things that are often not thought about like we'd love them to be. But and hopefully it will kind of get you guys percolating on talking to each other and your kids, and just thinking yourself about like what to do next and some of the things you might not have thought about to plan. I'm going to throw up information for Kerri and I, but before I go, Kerri, is there anything you want to kind of like add about our discussion, or anything that you didn't get to talk about yet?
I just want to encourage families out there to start having the conversations. I know from personally with my family, it's difficult. It was difficult, and the reason why I got into the industry is because my mother was severely underinsured when she passed, and my father, who's soon to be 90, has no life insurance. I've been in financial services for over 25 years, so I want to make sure that doesn't happen to any other families in the future. So start having those conversations, asking, do you have a plan? Are you covered? Let's look at it. Let's talk about it. So just have the conversation.
Yeah, I legit have to second that comment. Like, having the conversation about estate planning is hard, right? You have to talk about things you're not comfortable with. I don't look at estate planning as planning, for your death. I look at it as really preparing for your life, but it takes a bit to make that kind of conversion in your thought process. And it is really important to just have the conversations. And I mean, I know it's kind of like the long game, right? To come to me, and Kerri is probably very similar with their clients. They put your information on the fridge, and they look at it for a year, and then they finally realize it's time. And sometimes, you have to wait to that moment that you are ready, but you got to recognize like the things that could happen, how fast things can change in the world, and how important it is to make a plan. And I think that having the conversation about what is our plan and making that plan is really what's important. And so I encourage everyone to have the conversations and then give us a call. I mean, estate planning consultations are free for me. I don't know, Kerri, are your consultations free as well?
100% free. Yes.
There you go. So come in. It doesn't cost you anything. Talk to somebody to figure out what it is that you need, and then make a plan. All right. Well, it was awesome chatting with you today, Kerri. Appreciate it very
Likewise.
much, as always. And happy to be able to kind of do this live for everyone. And we will probably see you again. It's actually the year, wasn't it? We did a presentation together a year ago today. So
that's crazy.
I don't know how we did that. We just planned it that way.
It was the moon and the stars. Yes.
I know, but it's great. It's great doing that. So definitely we will chat with you guys again, be on live some other time. But thanks so much, everyone.
All right. Bye-bye.